Hi, hello, and welcome back to another video. Not too long after my last one, two videos in 1 or 2 days after a 3-month hiatus, but that's how it goes. So this is my November portfolio update. So I'm going to run through all of the trades I made in November. It was a pretty good month. I think I'm finally starting to get on top of my strategy a bit more. I'm making less mistakes. I feel like even though the markets have been performing better this month, in the month of November, I have been making less mistakes myself, and I feel a lot more confident in my stock selection. The makeup of my portfolio throughout now I feel a lot more comfortable with. I have high confidence in all of my picks. And yeah, just overall, I feel like I'm developing as a trader slash investor, and the results are showing. Even though the markets have been performing well, we've got the UK budget out the way, we've got the US election out the way, so there's a lot more certainty in the markets. There's less unknowns, so the markets have been performing a bit better than they were, but still great performance nonetheless. So let's get straight into the results. So as usual, we'll start with these slides. This is the month returns. So we are plus 6.58% for the month of November compared to the FTSE All Share, which is what I use as my benchmark, of 2.1%. So we've really outperformed the FTSE All Share, which is really good to see. This is my best returning month of the year so far. I doubt we're going to beat it in December, but that'd be great if we did. But yeah, 6.5% for 1 month I'm really happy with, and it's basically doubled the return of my portfolio for the year. I've got a light here and it's blocking part of my screen. I can't see the button to click onto the next screen. What's this one? This is the year to date. So we are just shy of 14% now year to date. And you can see here though, it's covered by this bit, the blue line in the background here, sharp uprise in November. We were kind of treading water for most of the summer. If you haven't seen my last video, I literally this morning, as I'm filming this, put out a video covering September and October, just catching up on the videos that I missed. So I run through all of the trades I made in September, October. We were only up 1% for that entire 2-month period. So to see this run up now is really good. Yeah, so year to date 14%. Hopefully we can improve on that before the end of the year. If I did finish around 15%, I'd be pretty happy with that. Lots of mistakes made this year. I obviously could do a lot better. It's not beating the S&P, but for the learning process I'm going through, trying lots of different strategies, making mistakes, I'd be happy with 15%. So I'll get on to the next one. Right, so this is the last 3 months. So I just threw this in here to show that this was the summer period, basically just treading water. And then we've had a nice sharp up climb since then. This is really annoying that I'm going to just shift this slightly so that I can actually see what I'm doing. There we go. And this is the 2-year. So I threw this one in as well because I'm quite happy with this as well. So I'll jump one forward. So this is the all-time. So this is basically the 3-year. This is from the beginning of 2022 when I started the public portfolio. We're up 28.4%. But for the last 2 years, we're up 31%, which I'm very happy with, and absolutely destroying the benchmark of the FTSE All Share, which is only up 10.4%. So I'm really happy with that. Hopefully we can improve on that and keep that going. That's the all-time, as I say. And then this is the portfolio as it stands at the end of November. So we're a few days into December now. It's basically the same, -1, which I'll get onto when I go through my sales. But one thing you'll notice, I said that ignore this Palantir Technologies. When I took this, it's on -100. It's only because it moved from the NASDAQ to the New York Stock Exchange, or the other way around. It moved stock exchanges. And Stockopedia just took time to update that, basically. So it's showing as that it doesn't exist. It does, and I'm up around 50 or 60% on the position. So ignore that. There's only one stock at this time that I was down on, and the rest of the portfolio is green. That's really nice to see. It's a nice confidence boost when I look at it each day, when I come on and it's a sea of green. That's what we want. And with this strategy, I am cutting my losers quickly anyway, so there should never be more than 1, 2 or 3 at the max in the red anyway. but it's really nice. There's been frequent times in the past month or so where it's been all green, and it's just really nice to see. But this is sorted in percentage gain order. If you want to just pause or take a screenshot and go through and have a look at them individually, you can do. I'm not going to run through the trades of all of these today. I'm just going to run through the buys and sells I made during the month. But all of these will have been covered at some point. My entries into all of these will be in a video somewhere if you want to go back through this series of my monthly updates. And then I've thrown in an extra couple of slides this month because there's not as many trades to go through. And this is all pulled from Stockopedia, which is where I upload all of my trades to show it to you guys. So this is the sector breakdown, and this is just to show that I'm reasonably well diversified between all the sectors. We've got fairly equal weightings between technology, cyclicals and healthcare, and then we've just got one or two stocks in each of financials and industrials. I'm not sure, this is just a further breakdown, but this is the main chart. So quite happy with the spread we've got on that. At times I have been a lot higher on technology, especially when the US kind of running through 2023 and 2022, the US tech market was just exploding. So I was kind of 50-60% in tech at that time, but we're balancing out a little bit more now. And then this is the style composition. So just a spoiler alert for the future, there's this one stock that is this momentum trap quadrant. That's gone now. So at the moment, the portfolio is entirely green style ranks. So for those that don't know, on Stockopedia, they assign rankings to each stock, and they'll give titles for something like super stock, which just means it's a really good all-round quality stock. High flyer means it's got a lot of momentum. Momentum trap means that there's a warning there that it's been on a good run, but it might be starting to peter out. But green is good, basically. Red could mean there's a warning there, which really I should have paid more attention to this, because that stock did go wrong. But yeah, that's looking all good. And then this is a percentage breakdown of the portfolio. So my ideal entry is a 5% position entry. So they should start at 5%, and then obviously if the trade goes well, it will grow. Most of these that are below, it's not because the share price has gone down, it's because I've taken partial profits. So in fact, all of the ones that are below 5%, I have taken partial profits on. So they're going to reduce just as a result of that. But yeah, that's the target, 5% entry. And then this is just arbitrary, really. I'm not sure if I would, but if a stock ever did reach 20%, I don't think it would, because I now have a thing where I take partial profits on the way, but if it did, then I would take profits. I don't want one stock being more than 20% of the portfolio. Right, that is the end of the quick kind of run through. I'm now going to hop onto my buys and sells for the month of November, of which there weren't many, to be fair. Yeah, there just weren't many. There weren't many setups, and I've got stricter on my entries. So for those that saw it in the last video, I'm going to be repeating myself, but for those that didn't, I was quite lax in my rules for entry. So I have a checklist system, and a stock has to score 36 out of 50 to pass the checklist. And for anyone new that doesn't know what the checklist is, pinned comment at the top of my Twitter profile, or just find it on my YouTube channel. There's a video going through my checklist system, my entire investing process, which is worth watching if you haven't seen it before watching these, because you'll have a better idea of what's going on. But what I would do is, if a stock scored kind of 30 to 35, I'd put it on a keep an eye on list. So it didn't pass the checklist, but it was quite close. And I would still be trading quite a few of them, being like, oh, it's close enough, and if it's a good setup, I'd buy in. But I have realised, which is good, it means the checklist system is working, that quite a few of them were failing. So I have decided to just eliminate them. I'm categorically not allowed to buy a stock if it doesn't pass the checklist. And since then, obviously it's the timing of the market as well, but my results have been improving. I've been having less fail, but inherently it means I'm trading less. Whether that's a good thing or not, I'm not sure. Time will tell, but I think it probably is. Purely as a result, as I have less stocks to choose from, less stocks that are setting up. So there's just less opportunities inherently. And that was the reason that I was taking other trades, is because I was getting impatient and I was wanting to make trades, and I was kind of taking ones that I shouldn't really be making just so that I could have some action kind of thing. So I'm just being more patient now. Palantir, so we had a previous buy all the way back in August, went really well. We've taken partial profits on this one twice at my 10% and 20% range. But we're still holding a third of this position. We're waiting for it. I will sell the remaining third when it crosses the 50-day moving average. But up here, we effectively had another breakout move. It wasn't a huge period, but we had earnings, and the earnings results were really strong. So there was a strong breakout here. So I decided to open another secondary position. So I treat this as a completely separate trade. In my spreadsheet where I kind of record all my trades, it's a separate trade. And it's a short-term trade again, so we're taking profit targets at 10 and 20%, and then the final third of the position when it crosses the 50-day. So we've already hit 10% and 20%, and again, we're waiting for the 50-day. So both of these trades have a third remaining on them, and I will sell the entire lot once it crosses the 50-day moving average. But what I might do, because it's quite a big drop at the moment to get back down to the 50, it's almost a 30% drop. I don't really want to give back 30% of the position. So if we have what seems like a blow off top, if one day we have a really strong move and the share price goes up 20% or something, I might just sell into that strength and just bank some decent profits. The next entry we had, which was a brand new position, is Dutch Bros, which is a coffee chain in the United States, but it's very Americanized, very sweet coffees, lots of kind of like caramelized ones, frappuccino, latte, chino things, lots of flavor combinations going on. It's not really somewhere you'd go just for your black traditional coffee. It's somewhere you'd go for something with lots of sugar and that type of thing. And yeah, this has only recently come onto my radar. It only IPO'd in 2021. It's been a steady decline and then putting a base since then. And then I had this resistance line. It broke through here on the back of earnings, I believe. Yeah. Huge volume on the day it broke through. I missed it for some reason, which tends to be a thing I do quite often. And I think the reason I do miss quite a few of these is because I'm at my desk at 7 in the morning for UK. I go through all the news and I tend to work until about 5. And obviously the US market doesn't close until, I think it's 9 o'clock our time. So I missed the last few hours of the US. So sometimes I just miss some at the end of the day, but it's not the end of the world. But anyway, I entered a couple of days late, a bit late, but it's worked out okay so far. We've been steadily in as I would want, a perfect setup. It's carried on growing, and we're in this for a long-term trade. So that means I will sell a third at the cross of the 50-day, a third at the cross of the 150-day, and then I'll sell the remainder once it crosses my trailing stop on the 150. So these are all obviously things that will only come into activation if the share price goes on a bit of a run. If the share price falls back and hits my stop here, then obviously I'm out of the whole position. But it just gives a chance for those longer term games, like I've got on Meta, which is currently up 250%, which I'm quite happy with. So that one's going reasonably well. Deckers Outdoor Corporation. So this is one I've actually wanted to be in for a while, purely because I really like the product. So they are a footwear company. They own the Hoka brand, which is the one that I'm really familiar with. So they make running shoes basically. They started off predominantly doing trail running shoes, but they've moved into road running shoes, and they're becoming a really, really popular brand, like competing with the big name brands like Nike and Adidas and things. A lot of the best runners and athletes in the world are now sponsored by Hoka, and they sponsor some big running events and things around the world. So it's just a big brand now, and it's been growing really well for the past few years. I'm just a really big fan of the brands. I'm a runner myself, and Hoka is my go-to brand. I have Hoka road running shoes, Hoka trail shoes. I'm just a really big fan of the product. And it's been on a terrific run. I started paying attention around here when it came onto my checklist. And I was basically just waiting for a good entry opportunity. It took a breather here for several months, and I just got in on the breakout here. I've put it in for a short-term trade just because it's already been on such a run. I don't know if it's going to keep going. Fingers crossed it will, but I'd be happy to take my 20% plus a bit extra if possible, and wait for the next, get out and wait for the next setup. If it runs up, I'm out of the position, it puts in another base and then goes, I can go again. And the power of compounding, even if you're not in it for the whole move, but you get 3 or 4, 15, 20% gains, that compounds to make kind of 100% gain. You're still going to be getting good returns. And you're minimizing your risk as well of drawdowns. So yeah, there's not much to say about this one really. It was a perfect base. It broke out really well on volume. I actually managed to enter on the day of the breakout on this one, and it's been progressing fairly well since. So once it reaches this green line, I'll take a third of the position. I'll sell a third of the position to lock in 10% profit on that third, and we'll move the stop up to break even. So then theoretically, unless it gaps down, I cannot make a loss on the position. Next one, so this is the only one that hasn't worked out of the ones I've bought in November. So this is the final buy. There's only 4 buys in November. For this portfolio, I should add. I'm going to put out a video soon, which is I have another a separate portfolio now, which I will be making videos on, which is more of a passive portfolio. But I'm going to run through that in its own dedicated video, which will be coming out this week. Well, Thursday, this week or early next week. But anyway, this one, Sarepta Therapeutics. I really don't know much about this company, but it passes my checklist. So it's on the watch list. Ideally, I do like to have done a reasonable amount of research on a company before I buy it. But sometimes there's just not enough time. If a stock goes through earnings, or it comes up on one of my screens and it passes my checklist and it's setting up really well and it's at a buy point, sometimes I'll just trust in the checklist and I'll buy it and then get round to doing research later on. This is one of those situations. I really don't know much about the company, but it popped up onto it's made it onto my watch list. And it was in a downtrend. When it's in a downtrend, I will put my resistance line at the most recent high, as long as it is above the 150-day moving average. So this just cleared the 150-day. I put my resistance line on here when it was down here. It's come up, big jump up, and it's broke through that line on really decent volume, really strong volume. So I entered. I put quite a tight stop on, just because if we punch in a bit here, actually, to give you an idea of what I was thinking when I entered the position and where I was going to put my stop, we entered here. Ideally, I'd want to go below the 150 all the way down here to give it a bit of room to work, and I feel like that probably would work out with how the share price is going now. But if you look, that's a 11.5% fall, and with fees and things that I get for FX and dealer fees and stuff, that would really turn into kind of a 12% loss. And that's my maximum stop loss is 10%. So I couldn't do that. So instead I put it below the 150-day and below the low of the kind of previous day's big move. So quite a tight stop loss, and that was only about 6% or so. It fell down. It broke through that literally the day after I bought it. I didn't sell on that first day because I thought that is the perfect shakeout. And the next day it might just show strength. So I thought I'd give it until the next day. If it shows strength, then I'll stay in the position. If, however, on the second day it shows weakness, I'll be straight out. It showed weakness. It didn't look like it was going to reclaim, so I'm straight out of that position. And that was a loss of 9.4%, so within my 10% limit. Obviously, I could have sold on this day, but I'm actually I'm within the range of that day where I sold, so that's just one of them. It didn't work out. I don't think there's anything particularly wrong with this. I can see this still being a decent trade, and I will look to re-enter it, I think, if it does pass through this level again. I'll look at entering for a second time, because even just going up to the next resistance level, that's a good 25%, which I'd be happy to take. And the only other, so that was one of the sales. Palantir, we've had sales on. So as I say, I took the partial positions off. We took a third off at 10% and a third off at 20%. I think those percentages are a bit different, but roughly that one's at 10% and this one is at 25%. And the only other ones were Auto Trader is a failed trade. So this is, I'm sure most people know Auto Trader, but it's the UK-based company. It's the online car marketplace, so where you can buy and sell your second-hand cars. It's got a monopoly on the market. It's a really solid, good company. I have no qualms in owning it at all. It's just the trade in this particular situation didn't work out. So if I zoom out a bit to give a bit of context, it's not a big runner. It doesn't go anywhere very quickly, but this is the COVID kind of valley that every stock has. Sideways for a long time and then started putting in a fairly steady uptrend. I was just looking for a position to enter to kind of try and time this to get on that steady uptrend. It had gone sideways for a while here after a big move up from the earnings. And normally what I've noticed when there has been a big move up from earnings but it's then gone sideways, it normally breaks to the upside with strength, because that initial up move is normally because of strong earnings. People then take their profits, and all the people that have been taking their profits are kind of tired out, and there's no one selling left, and then that normally allows it to kind of continue its run upwards still on the back of these good earnings. So I was happy entering here. I entered when it broke through. I had it as a short-term trade, so I was going to take profits at 10% and 20%. It never got there. It kind of went sideways for a while, and then it dropped down when we got to the next earnings. And obviously these earnings weren't quite as impressive as the last set, and it gapped down 7% on the day. On the day, it kind of went below my stop. It came back above my stop, but what I could have held on, because it's dancing around my stop. I could have held on to this, and it has started coming back up. But what I really didn't like is that it had gapped below the 150-day moving average. To me, that kind of felt like it could quite easily continue falling, just from a technical perspective. So I just sold when it was slightly above my stop, and we got out of there with just a 6.4% loss. So no real harm done. I think I'd do this trade again. I don't think there was anything particularly wrong with it. I might even try again when it breaks through this upper level. I'm kind of hoping that it goes sideways for a good 6 months or so, even a year, and puts in a really solid base, and then breaks out and gives us an opportunity to enter then. And then the only other sale, which is a profit, taking partial profit sale, is Texas Roadhouse. So this is a US restaurant chain. I do like grilled food, ribs, that type of thing. And this has been, again, another one that's been in quite a long phase 2 uptrend. So we were only taking it for a short term. So if it's in an uptrend already, I'll take a short term. If it's coming out of a phase 1 base, then I will take it for a longer term trade. I run through all of that in a bit more detail in the video that I put out this morning, running through September, October. So if you want more detail on that, the difference between a short term and a long term trade with my strategy, then go and watch that video. But yes, so there was a base here for, how long was this? From May to October, May, June, July, about 5-6 months. So a decent base there. It waited for the 150 to catch up. It touched off there, just broke through, but kind of held. A good sign that there's still some strength in the stock. Came up and broke through on a little just above average volume. I entered, and so far it's been going well. We sold a third of the position at 10% profit, and we've moved the stop loss up to the entry price. So again, unless it gaps down somehow on earnings, but there's not earnings for a while, But unless it gaps down through there, there shouldn't be a way that we can lose money on this one. There should be a kind of nailed in profitable trade, and we'll just wait. Hopefully it gets up to the 20%, we'll sell the remaining third, and then we're just sitting on more profits. So yeah, that was a quicker video than usual, which is nice. November, not a very eventful month in terms of number of trades, but a very profitable one, which is very good. And now that I've gone through that, we've sold this healthcare stock that I don't know anything about. We have 15 stocks sitting in the portfolio, and at the time of recording, they are all profitable. So it's a full green portfolio. And the good thing is, once we've managed to enter into a stock and it's showing strength, we can just sit. That's 15 stocks that are all in an uptrend. Most days they're putting in a gain, and we're just sitting back, reaping in the profits and waiting for any other opportunities that come up. So because we've got 15 stocks, that means it's a maximum of 20. So we've got 5 more stocks that we can add if a really good opportunity arises. But as I say, I'm being a lot more patient than I have been in the past. I'm only taking trades on ones that pass my checklist. As this has been a quicker video, I'll very quickly just jump onto my watch list for UK and watch list for US to show you all of the stocks that pass my portfolio. I won't go through them, I'll just run through them. So they're here on the right. Can I make this? Let's make this bigger. So this is the UK. As I say, I'm just going to run down so you can look at the ticker and look them up if it interests anyone. There's all the tech ones. And then we have a lot more I've confused myself now I've pulled this out, I don't know where to go. Oh yeah, there. And if I come down to watch list USA, there's a lot more in the USA. It's about a 3-to-1. So for every one that passes the checklist in the UK, I tend to find 3 for the US. So this is all the cyclical ones, or the defensive ones, or the industrial ones. I'll show financial. I'm actually not trading financials anymore, so that's another rule change I've had. And then healthcare ones, there's a lot of healthcare stocks in the US that pass. And these are all the tech ones. So that's just a quick run through of all the ones. So all of these score 36 or above on my checklist. And you can hopefully see why sometimes I don't have the time to research before I buy. So that stock, which turned out to be a failed trade, but there's quite a few in here that I haven't researched yet. So I when it's a quiet day in terms of news coming out, I'll just spend a few hours researching a stock so I at least understand kind of what they do. But anyway, let's finish there. Let's actually make it a relatively short video. Thank you for watching if you're still here. As I always say at the end, please drop a like. If you're not subscribed, subscribe. I will be doing these every month. I aim to, even though I missed a couple. And drop a comment if you've got any questions, or just to let me know how your portfolio is going. I always do like to hear other people's stories, how their trading's going, what returns they're getting. I find it all super interesting. So yeah, thank you for watching. Have a good day.